Thank you for joining us at XM.com. You're watching the Daily Market Comment by Mario Sajikiriakos for Monday, August 29th. I'm Christina Marujos. The Fed chief resorted to shock tactics on Friday, striking a forceful tone about his resolve to win the inflation battle and sending financial markets into a tailspin. His overarching message was that the Fed is committed to do whatever it takes to cool inflation, even if that means a period of economic pain. There was a sense of determination in his laconic speech that spoke louder than words as he reinforced the notion that interest rates will need to be kept elevated for some time. In other words, the Fed won't waver at the first sign of trouble. It will keep hammering away until the inflation monster is slain. All this served as shock therapy for market participants who immediately slashed their exposure to riskier assets like equities and loaded up on US dollars, as Powell dispelled speculation that a pivot is around the corner. Stocks on Wall Street came under heavy fire, with the S&P 500 losing a staggering 3.4%, and futures pointing to another round of selling today. In the FX sphere, the main losers once the dust settled were the British pound and Japanese yen. Cable fell through the trapdoors to touch $116.50, a region last reached during the height of the pandemic. It's particularly concerning that cable couldn't rally much when equities enjoyed some relief lately, but shared in the downside as soon as risk sentiment turned sour. Meanwhile, the yen has turned into a pure play for interest rates, slowly but surely losing its status as a safe haven asset. With bond yields moving higher in most of the world except for Japan, thanks to the central bank's ceiling on domestic yields, the yen cannot catch a bid anymore even when equity markets go into panic mode. The only beneficiary from the Fed's shock and awe strategy was the US dollar, which hit a fresh two-decade high against a basket of major currencies on Monday. With an energy crisis raging in Europe and China's property sector rolling over while the Fed remains on the warpath, the world's reserve currency is enjoying the best of all worlds: a lack of alternative, safe haven flows, and widening interest rate differentials. Gold prices couldn't escape unscathed either. The precious metal came under renewed selling pressure, suffering at the hands of a supercharged US dollar and a sharp spike in real Treasury yields. Another battle for $1,680 seems imminent, a region that has acted as a springboard for the price action several times over the last year and a half. This was the Daily Market Comment at XM.com. Have a great week.